I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a guest I have not had on before, but I've had many requests by you guys out there on YouTube and folks that come to the USAWatchdog.com website. His name is Bo Polny. He's with Gold2020forecast.com. Bo, great time to have you on. Good to have you on USAWatchdog.com.
Greg, I really appreciate you reaching out to me, and I thank you so much for being here. And yes, it is exciting times for gold and for the stock markets too. So thank you for having me here. I really appreciate it.
Well, back in December, you called a low in gold. You would have none of this $300 gold, $800 gold. You said gold would be $1049, $1050, somewhere in that neighborhood. And sure enough, you hit it. You did these cycles, and we'll talk about your cycles. And then you said that you predicted, I've been reading your stuff before we interview, you predicted that gold would, have a pretty nice run-up starting in January. Sure enough, ding, ding, ding. And now you said that you were predicting a big sometime run-up in gold. We got that last week, a 50, 60, whatever dollar, just one day at one point was up. So, and the headlines around the world of stocks plunge, gold plunges, gold surges, stocks plunge, bonds plunge, even on Drudge. It was on the front main title of Drudge. What's going on with your cycles?
They're perfect. That's really what's going on. We scheduled an interview with Future Money Trends on December 3rd, intentionally on that date, because our cycle on the counts that we had was supposed to come in a low on December 3rd. That interview is on our webpage, labeled December 3rd, and we said gold bottom today. I don't think there's anybody in the world that went on, either wrote an article or did a video on that date calling the bottom. We did, and it's on our webpage. And since then, we were in Vancouver. We did a presentation in Vancouver, I think it was on the 24th of January, and on that date, I was on stage, and I basically said gold will have its next leg will start, or the next jump is supposed to begin. That was that Friday, which I think worked out to, let me see here, the Friday was January 29th. Well, if you go to the gold chart from January 29th, which I've basically got up, we're just easy to show in front of me here, but basically it's been straight up. We've had 10 days on gold straight up since that exact date that I gave. So the patterns have been playing beautiful, and what we've seen and happen so far in gold, Greg, that's just a warm up. Okay, we're not even close to seeing movements in gold. This is the start.
Bids at the start. Let's get your 2016 forecast. First of all, let's just take a look at what you think about the gold market. You think that we're going to hit some big highs soon. Talk about that.
Well, here's the thing. I was thinking of how I could present this, to you and mostly to your listeners. But this is really important to understand, because what's coming is a transfer of wealth. Okay, and so you need to. I want to explain what that means. When you look at a transfer of wealth, it means that there's a huge financial shift in the landscape, okay? So you're asking about price of gold. Well, what's going to happen is today, for example, the gold had a big move, and it shot up like $50, okay? Well, that's fantastic, but see, you have to look at the people in the stock market, okay? So let's apply, if you have money in the stock market today and you don't act, okay, you don't buy gold because, heck, the stock markets have dropped. These are cycle lows, and the markets are going to bounce from here. Okay, there's people with that mentality. Oh, these are good times to buy the stock market because you buy the lows, right? Okay, well,
buy the dips, yeah.
Buy the dips. Okay, let me explain. If you think this is volatility, if you think this is a dip, you're so far from reality of what's coming. It's not even close. What's coming is going to be so incredible that people don't understand. So I wanted to give you a very simple example, okay? And so I thought this would be the best way to do it. $5,000, okay? So let's say, today you have $5,000 in the stock market, okay? And with that, figure, well, I'm going to invest $5,000 in the stock market. Let's compare that. And then, or for the same $5,000, you can buy, which I brought here, 4 ounces of gold. Okay, so basically about $5,000 for these 4 ounces of gold. Okay, so with $5,000 you buy this, the other person is going to take the same $5,000 and put it in the stock market. Now, let me explain what's going to happen, okay? This is a transfer of wealth. This is how it's going to play out. What happens is you're going to have the stock market crash this year, a minimum of 50%, okay? So your $5,000 investment will end up being, say, $2,500, which is half, okay? Now, you might say, well, you know, my gosh, all this stuff going on in the world, I'm concerned. I'm going to go ahead and I'm going to buy gold, okay? So I want to buy gold with my remaining $2,500. So at least I'm buying insurance, that's what gold is, and I'm going to protect myself and my family. Well, that's fantastic. The only problem with that equation is, Greg, is this. Gold doubled. So what happens on that equation is your $5,000 will only buy you 1 ounce of gold for $2,500. That will happen this year. So from $4,000, from 4 ounces of gold, you will soon be able to buy 1 ounce of gold with a $5,000 investment in the stock market.
You think
so that
gold
will be a 5,000? So your 1 ounce of gold will cost you, in real money, today's money, a $5,000 in the stock market will cost you you will buy only one coin, one ounce.
You're saying gold is going to surpass its old 1900 all-time high.
Right.
This year, how soon is that?
But when it does that, it's going to be in reaction to a collapsing market. And so when the dust settles, you're like, oh my gosh, what just happened, right? I need gold. So you want to buy gold and silver for your family, right? But what ends up happening is that you put in 5,000, it was cut in half, but the gold price doubled. So it's a 400% loss. Or for those who bought the 4 ounces of gold, made 400% minimum. That's
when do you think this is going to happen? That gold's
doubling of the price of gold.
When do you think the price of gold will double? What's
Year.
your timeline?
Well, without giving I do have a timeline for that, but without being too specific, I can tell you it will happen between, this interview, and we have a date in October, which we've done our several videos, and we've called them. There's a date that we have in October. It won't happen on that date. It will happen between this interview and that date.
You think gold will hit $2,500 an ounce between now and October?
Yeah. Yes.
What else is happening for gold to more than double in the next 8 or 9 months? What else is going on for that to happen?
Well, you're going to have you have to think about how I try to put the whole picture together. So you have to look at the stock market. Well, falling stock market, what is that? Or a crashing stock market. What it really is a loss of faith.
Last week was terrible.
Right.
The headlines at one point said we're talking about systemic failure. This is all over the place, even on Drudge. Systemic failure. Gold was plunging. Gold was spiking. Soaring. Stocks and bonds were plunging. They're talking about negative interest rates in Sweden. They just went to negative interest rates. Now Janet Yellen is, well, that's not off the table. That just happened last week, and you're saying it's going to get much worse between now and October of 16.
Yes. See, in everything that is said and done, all of that media it plays into the cycle. See, that's what the hard part is, because it makes people really difficult to understand that concept, because it's like, well, the Fed or someone will say something to save something. Well, no, it doesn't matter what anybody says or does. Everything they say and do will complete the cycle. That's the reality of it. And so these cycles go back hundreds of years, okay? And the problem with a current cycle, anybody who runs mathematical models and does calculations on the markets and has the right answer, the problem is, if their model does not go back more than 250 years, their model is incorrect. And the reason is because this model starts with a currency act, and every 21 years or every 42 years, depending how you want to do your calculations, the same answer, it ends with a cycle low in the year 2016. But what is that? Well, that's the currency cycle. So at the end of this cycle, when the currency cycle completes, gold becomes money again, because it always was money. It just was hidden to the fact that it is money. But the world will always run to gold because it is money. It's the only money that's been around for 5,000 years. It's just the cycle and the timeline wouldn't let it be exposed as true money until the entire pattern completed, which is going to happen this year, and then gold will rise to the surface. It will restore the balances that were destroyed for the year for all these past years.
I know you don't like price targets for gold, but I mean, we're just talking 1 year, 2 years, 3 years, gold 2020. Where do you think gold could end up to balance stuff out? I mean, people like Jim Sinclair say it's 50,000 an ounce if you look at all the dollars printed. But then, you know, I guess some of these bonds are going to get destroyed and they're going to be worthless. And I don't know. Where are you forecasting the price of gold? And I want to get to silver, too. Where do you think the price of gold will ultimately go in the year 2020? Because you have a website called gold2020forecast.com.
There's a reason for that, actually.
Yeah.
But before I answer that question, you mentioned the word bonds, okay?
Yeah.
Let's touch on that for just a minute. Again, putting the big picture together, okay? So please ask your gold question again in case I forget to answer that.
Okay.
Let's talk about bonds for just a minute, and then we'll go to the gold question, okay? So in a crashing market, what happened in 2007, 2008, 2009? The world ran, they bought what? Dollars. And what? And what else?
Bonds.
Bonds.
Treasuries.
Okay, why? Because there was security, right? So in a crashing market, hey, you buy the dollar, buy bonds, and it's all good, So market crashes, but you're still, you're protected. So no one lost. It wasn't as bad as it could have been, right? So now let's go to this cycle, okay? This is what everybody missed. Everybody's talking about a dollar, going to keep going up forever, and it's the only safe asset. Well, let's just look at the truth, at reality, okay? In 2015 in August, the stocks, we did an interview on the 20th of July, intentionally again, because we knew that day was the final day up for the stock market. And we called it to the day, okay? Now, off that day, it's nothing been lower high, lower high, lower high, lower high in the stock market, okay? But what happened in August? Stocks crashed, right? What did the dollar do? It crashed with the stock market. Okay, two assets that fell together, both paper. Okay, that was not supposed to happen. Or at least it didn't happen in 2007. So those people calling for the dollar crash, it's not a possibility based on facts. Okay, we're going to look at now December, and anybody who wants to confirm this, please confirm it. The stocks, I did an interview on December 3rd saying the stock market, and on the day that we called the bottom on gold, that was the last day up on the dollar. On that last day, the dollar went up and then just dropped like 200 pips or something like that, okay? And that was the day that the gold bottomed, okay? So at that exact time point, at $1,045 on gold, the dollar dropped with the stock market again. Okay, the stock market continued to fall all of December and all of January. We had a cycle low the third week of January. Well, look what happened. Third week of January was a cycle low on the U.S. markets. Okay, that entire time, the dollar, did it rally? The answer is no. All it did was it went up and down, and it went sideways. Okay, these are factual comments that I'm making. Okay, then just now in February, what happened was the stock market went a little down lower across some world markets, Switzerland, Japan, okay? U.S. is still holding the third week of December low. What did the dollar do? It's falling with the world markets right now, okay? And the dollar actually broke the December low, confirming a lower low, which is bearish, okay? So my last comment is, so when you look at the dollar and we're looking at a market collapse or a massive crash, which way is the dollar going to go?
Do you think it's going to go down?
That's right. It will not be a safe haven. Now, this is critical to understand, Greg. If I bought a bond, if I was a country or something, I bought a bond, what's the return on a bond?
10 years, 1.7, I don't know, 1.8.
Okay.
Something like that. I mean, at one point they had a little mini interest rate, a little mini bond crash last week, but it's, below 2, not doing good.
Beautiful. Okay, but that's the key thing. Okay, so now that's your yield. Okay, now, if the stocks crash 50%, maybe 30%, whatever the market's collapsed, because again, cycles don't give me, I can project it with other ways for lows, but the bottom line is say 30 to 50% market crash. So what does that mean? The dollar is going to drop between 20 and 30%. Let's assume in the low end, 20%. Okay, a dollar drop of 20%. So you buy bonds with a yield of, say, 1.7. Let's meet 2% for generosity.
Yeah.
Okay? And the dollar dropped 20%. What's your net?
28%.
No,
loss.
your net is a loss of 18%.
Oh, 18%.
You gain 2%.
2%. Yeah. Sorry.
So you go to
Piece of
sell
20.
your bond. Hey, fantastic. I sell my bond in the crash, but the dollar dropped by 20% on a minimum, let's say.
So it's 18%.
So your net is a negative 18% loss. How many countries can be happy with that one? Now you want to know why gold goes vertical?
Yes. Yes. Why does gold go vertical?
Because
Where do you think the price will be?
people are going to run from paper. Because the bonds that were safe havens in 2007, the dollar that was a safe haven in 2007, this time around, is the opposite. So you don't have safety in paper. You don't have safety in the dollar. You don't have safety in bonds this time. So gold will be the asset class that everybody is going to run to because of what I illustrated on the bond scenario.
Do you think the Federal Reserve, and this will be just throwing gas on the fire, I mean, I've been saying this in other interviews, what's going to happen when the Federal Reserve says, oh, yeah, we're not going to raise rates, and then start talking about interest rates? Gold's going to take a moonshot. And sure enough, last week, big, $50, $60 day last week, and more, sure to come, according to you. Are you sure this is it? We're on the launching pad, and they're warming up the rocket boosters?
Yes. Yes, that's what's happening here. There's very little time left, and the people who are listening and
wait, very little time left to what? To buy gold at this
both,
price or at all?
Because if you don't act, if your money's in the markets, your net result at the end of when the dust settles, you will be paying a minimum of effective. Remember the example of an effective $5,000 today. You'll be spending that money, today's money, to buy 1 ounce of gold when the dust settles. And that's minimum. The market falls more, gold goes up higher, that's minimum. Okay? So that's the transfer of wealth that's going to happen. So, and the timeline, like I think it's going to happen, like I've said, between now and our date in October. The date in October is not a crash, it's something else. Okay? But the point is between
what do
now
you mean
and
it's something else? It's not a crash, it's something else.
Well, it's going to be some kind of, the cycles don't tell me the events. So I have to guess, so I'd rather not guess, but I have some ideas.
Well, give me some ideas. What's going to happen between now and October?
It's something related to individuals, to people, to worlds, to countries and nations. There's something that is supposed to be, could be triggered at that time point. It's a pivotal time on the cycles. When one cycle is going to end right on that date, then another cycle begins. So something could trigger, something could happen. There's something right in that time window that that potentially could happen or start to occur within the world. But before all that happens, you're going to have a markets collapse. We do have the time points for the low. There's a low time point that's arriving. There's a time actually that you can still. We're supposed to have maybe a little bounce here in the markets, and that's the final opportunity to get out. But if people are not out of their positions or done something, with their stocks before the end of this month, February, it's going to get ugly, okay? And then we have the cycle point for the last little push. We've got the cycle time point, just like we had in July of 2015 for the high. There's a cycle low time point this year. And that time point is critical to know if you want to do something about it or act. But these are cycle time points that are mathematical calculations that have been incredibly perfect.
Now, will the cycle crash in October, or it's going to be all over before October? And then how big will this be relative to 2008, 2009?
Well, it'll be all over by October.
It's already crashed and done. Dust is going to be settling.
And so the October will be the reaction to the crash. Okay? So there's going to be a reaction to the crash, either before then or into October. But, that's when money printing is going to go through the roof, because they're going to have to do something based on what just happened. Just like historically it's happened. But this crash, if you've watched our video, the crash of 2007 and 8 and 9, that low in 2009, Remember, that was a derivative bubble that carried over from 2001, 2002, 2003 crash, okay? And so it was repackaged, and you have the next derivative bubble, which topped out on July of 2015, which is in the quadrillions now. So this crash is supposed to be quite biblical.
You think it'll be worse than '08?
Yeah. It's because, remember, this is the completion of the cycle that started 252 years ago. In '08, that cycle did not land on if you did 21-year counts or 42-year counts, that did not land on a cycle low. So this 2016 is a completionary cycle of a 21-year cycle. Every 21 years is a crash low, or every 42 years is a crash low. And this cycle is a 21, a 42, and a 252-year cycle low.
So it's big.
All three of the cycles complete this year.
Is this going to be worse than the Great?
I don't know how bad it's going to be, but I can tell you, I think what we've been experiencing so far is a complete warm-up. Not even close to what's going to happen.
You think it'll be worse than...
Until the time date arrives that we have in this year, you have to be. It's dangerous, extremely. Because it's when these supports start to break, when the August low already broke on virtually all the world markets. We said the August low was supposed to break on all the world markets in January. It did. Okay. The only two that didn't take it out was the Dow, and the Nasdaq. But once you start breaking once that August low breaks on the Nasdaq and the Dow, then there's really no support. It's a free fall. And so, like on London, for example, the cycle target is like 3,700 points. Okay, for example. Well, that's down to where it was in 2009 on the low. So that's still a huge drop from where it is right now. And this is across the world.
I know a lot of people. There are some people come on here that will not admit that the markets are manipulated, and you clearly in the pre-interview said, the gold markets they're manipulating everything. And so here's my question to you: how can you get this with all this massive manipulation and fraud and rigging of LIBOR and currency markets and gold and silver, the fraud, criminal? How can you get your cycles right when you have that much intervention and manipulation?
To better answer that question, because every time I answer that question, people are like, "Oh, markets are rigged," and they don't believe. Okay, so let me go back and let me give you let's do 6 examples of how it's irrelevant. Okay, watch my videos on my webpage. I illustrate clearly using Daniel's timeline how we forecast $49 gold and $1,923 silver. $49 silver opposite, and then $1,923 gold in 2001 to the exact day.
Oh, let me get this in quick, because people are going to say, ask him about where is gold and silver going to top out in the next 4 years.
Okay.
And then you can answer your Daniel question. But you said, so where do you think gold and silver are going to top out in dollar terms?
Okay, so first off, let's do 2 answers to that question. Number one, this year, okay, remember my example of $5,000 gold? Okay, $5,000 in the stock market today will buy you 1 ounce of gold.
$2,500.
Okay, $2,500 because that's what it's going to be. Now let's do silver. Okay, 1, 2, and I got to put one more. Hold this here. This is not light. 300 ounces of silver. Okay, 300 ounces. That will buy today. The stock market. If you bought the stock market or silver, $5,000 will buy you 300 ounces of silver. Okay.
Okay.
Cut the price, stock market crashes in half, now you only have $2,500 to spend. Silver didn't double, it tripled or quadrupled, it went to new highs. So we're at $50 this year.
You think silver will far exceed the price rise in gold?
That's right. So then what ends up happening,
so the price target for silver this year is how much?
Well, here you got 5 ounces.
Yeah.
For 50. 1, 10, 20, 30, 40, 50.
Right.
50 ounces of silver. So your $2,500 that you have remaining in the stock portfolio, you sell to buy silver, okay? Well, the problems you're going to have is that silver now doubled. So guess what? You're only, from 300 ounces, you're only buying 50 ounces of silver.
So this year silver will be $30 an ounce.
So that ends up being, if it only goes to 50, I know it's going to go higher than that, okay?
Wait, stop. So this year silver will make new all-time highs along with gold at 2,500. Silver's going to make new all-time highs above 50. dollars an
Right.
ounce.
Exactly. But now, effectively, this is the key. Effectively,
That's this year, 16.
This year. That's correct.
Okay.
This year. But effectively, your $5,000 investment in the stock market today will only buy you those 5 ounces, which ends up being $100 on silver with that effective $5,000 investment. That's just right. That's on the first move.
And you think the stock market will get cut in half? Now, I had the privilege of reading somebody. You said it may go down as much as 90%.
Well,
So the stock market could take a tanking a hit much as 90%?
Well, not this year, okay? This is a long-term cycle, and when you say the year 2020, 2021, 22, so this is out, because once you have a triple top or a triple failure,
Yep.
you collapse and then you never go up again. So you just keep crashing for years to come.
Okay, so back to gold and silver. Where do you think
back to
gold
gold
will
and
be in
silver.
2020?
So gold and silver, the minimum price targets would be just in real money's minimum would be in the $5,000 range on gold, silver $300, $400, $500 on silver. Silver will outperform gold just because of the ratio right now being 70-1. When the silver and gold top out, the ratio is going to get to a minimum of 10-1. So if gold got to say 5,000, that's $500 silver. If gold got to 10,000, then you're looking at $1,000 silver. Okay?
So what do you think? What do you think would happen faster? You think we get 10,000 gold and $1,000
Well, I say
silver?
right now, to be safe, I say the minimum target, would be a minimum. We're looking at minimum $5,000. So from this low of $1,045 on the 3rd of December, your minimum move now on this cycle is going to be $5,000 on gold, or in that range. That's basically where gold's headed right now. To me, price is actually less important, Greg, because what I care about is the time of it. See, because when I can do the mathematical calculations, I've already calculated out when that time point is going to be. And so that will be more critical. Not the price, but the day, the week, or the time. So timing is far more critical, and we've already calculated that time point. So it's more the timing of it. But yes, if you want a price, easy, would be $5,000.
But your gut is telling you. I mean, what would you tell your family? You'd say, "Oh, it may go 10,000, 15,000. It may go higher." I don't want to get into Fantasyville, but what you're telling me is that's good. This is going to be a 252-year cycle low. That it's going to be worse than '08. That it likely be. I have had some of my guests say it'll be. One of my guests, Michael Pinto, said it'll be worse than '08 and the Great Depression combined. It'll be worse than those.
Because all of those things you just mentioned, neither of those two crashes completed a 252-year financial cycle.
So you think this is the big one? This is going to be the whopper.
This
is
will
the
be
crash of all crashes. It will eclipse the Great Depression and easily 2008.
It will be the one that breaks faith and confidence in the financial system, and then you're going to have everything change. Then gold becomes money, silver becomes money. And the problem that people are going to have, in addition to what I described in terms of paying for it, is getting it. Who's going to want to, if I, and you and I, let's say you've got gold and silver, because you bought it as an insurance policy to protect yourself, your family, right? Okay? And all this happens. Are you going to sell it? No, that's why it goes no offer. No one's going to want to sell it. And if you do sell it, it'd be for someone not just, you sell little pieces of it, But that's the thing is, when this happens and it becomes a true asset, a class of value, no one's going to want to sell it. It's going to be hard to get your hands on it. And the premiums are going to be explosive. So that's the problem. In addition to even if you have the money to pay for it. People will be waiting just to get it.
So, Bo, if it's going to be so bad, and all this is going to shake out in October, are we going to have an election? Is there a possibility that the election might not happen because financially things will be so bad?
I've looked at that, Greg. I honestly don't want to give you my true opinion on that, but I can tell you, watch the videos, okay? And there is a date that we have in October. Jonathan Kahn spoke about the day that never happened last year, and it wasn't supposed to because it's supposed to be this year, okay? That date becomes a rise before the election, okay? So
if the crash isn't, I just want to get this straight. I'm going to interrupt you. I'm sorry. So the crash isn't going to happen in October. You're saying it's over. It's reaction to, oh my goodness, what are we going to do now? That's what's going to be happening in October. that the crash will be surely evident, and people will be surely feel robbed, screwed, cheated, with no money, at least people without gold and silver who protect themselves and got their house title and their car title. You're saying that in 2016, we have a reaction to the crash that already happened in the middle of the year.
You're correct, Greg.
No, you're... Okay.
That's exactly, you illustrated it beautifully, but that's really how, and then other things start to happen. Worldly events begin to happen. There's big changes start to happen in reaction to that. It's just the landscape changes. So what comes out of this is something new. You're going to have something rise, something new. You're going to have
a new financial system.
Well, right. You're going to that kind of stuff. It doesn't have to happen on that date, but the start of something. It's like the start of. You'll be able to go back in time, just like I did an interview on when I did it with True News on July 20th. I said, the market's not just going to fall tomorrow, but you'll be able to go back in time and see that everything started to change then, and you'll see the market start to make lower highs and lower lows. And so after that time point, other events start to happen, and these are biblical times that we live in.
And you're saying that the crash will be so bad. Do you think that the bond market will just get wiped out? People will just say, what a microcosm, Puerto Rico. They got $71 billion in debt, 3.5 million people. North Carolina might have $1 billion in debt, if 10 million people, for example, size. And they don't even want to try to pay it back. They just want Congress to give them Chapter 9 so they can go, sorry, we got your money. Is that going to be amplified on a global scale, that the bond market people will just say, sorry, we can't pay it, that's no good?
Well, I've when I do my stock index, I basically overlay like 9 or 10 world markets on it, okay? And it's amazing. They're all the same. Okay, there's every cycle turn, they're all the same. Just like you look at like Germany was stronger a while ago, now Germany is weaker. Germany didn't want to fall, now it's falling more. Switzerland was stronger, now it's falling more. You had the U.S. holding up, and now then it dropped. The S&P finally broke the August lows. So they're all interlaced, like incredibly. They're all interlaced because the bonds were sold everywhere, right? So everything's interlaced. And then I give you the example of when the market's crashing, these countries might, they might still hold bonds as a safe haven, but if the dollar gets devalued by 20 or 30%, what happens to the country that holds those bonds? They just, if they go to sell the bond, the bond's worth 20, 30% net less because of the devaluation of the dollar.
Do you think there might be a selling frenzy into the U.S. bond market that would they'd have the U.S. would say, sorry, we can't liquefy that much debt?
Honestly, Greg, I don't know that much about bonds. I just look at the charts, But
you think the bond market will crash, the stock market will crash, the real estate market will crash, and the gold and silver market will go up?
That's the bottom line. That's the bottom line. The degree of the crash in the bond market, again, I can't give you the degree of the crash. I try to put it all together, to maybe make an explanation. But I do know that the stock market's going down. I know the dollar, as the examples I've given you since August of last year, of 2015, how it's been following the stock market. So I know the dollar's going down. And so if those two go down, and I know the gold cycle is going to be explosive. So, the bond is in the middle of that, and obviously people are not going to run to bonds if gold's shooting up in price. Or maybe they are, but gold's still shooting up in price.
You think the gold market cycle, silver market along, both explosive is the term you would say?
Right, yeah. We called the bottom. No, we did an interview on that day. No one believed us. We were the only ones that called the day. Within in the interview that we did 2 days after the miners dropped. When I was in Vancouver doing a conference in Vancouver, on the 24th or 25th I spoke. On the 19th or the 20th, the miners dropped, and 2 days later I did the interview, and I basically said the miners bottomed on the 19th, 20th of January. Okay. Well, how did I know that? Well, because gold bottomed, and miners usually, that was a third bottom on gold. So I did this here. I don't think you can see this, but can you see that, Greg?
Yes, I can.
Okay. So basically, this is kind of something.
That big blue arrow is where you said it was bottoming.
Right. With the first arrow, the big fat black one. Okay. Yeah. That's the bottom. That's the day we did our interview. and then you see three little black ones off off the big one. Okay,
Yep.
that's 1, 2, and 3. So that's a higher low, higher low, higher low. So each one's a higher low. That third one is where the miners bottomed.
So we got it.
Okay, so the miners bottomed on that third one. And then in the interview in Vancouver, we basically said within a week, that Friday, expect gold to make its initial thrust up. And then we have 10 days up, boom, straight up from that time point. And then, just to lastly, look, if I don't have to put this up again, look at that chart and you'll see all these numbers starting here and they go up.
Yep.
Those are moving averages, okay? 50-day, 100-day, 200-day, 300-day, 400-day, 500-day, 600-day. This is what my subscribers got, okay? And I basically showed them, when you take out the 600-day, which we did today, because of today's interview, I did this last week, but, we're interviewing here on the 11th of February, the $50 move just took out a 12.16. That's where the arrow's pointing. That's the last line, a 600-day moving average.
So you think it goes...
It's sliced through it. And you see this last picture, you know what that is?
Yeah.
Blue skies.
So you think because you've taken out this 1216 that
price is
gold's
irrelevant.
going nowhere but up, up, up?
It's the price is irrelevant. It's the moving average that's sliced through.
Would you tell people to go out right now and go and secure gold and silver? Because I am fearful that in the not too distant future, whoever has got physical gold and silver, if they see these big violent move ups, they're going to play the market with their inventory and just stop selling. Do you think that could happen? And do you think people should go out and try to get gold and silver right now?
Well, again, I don't want to give financial advice, but I personally think it's a fantastic idea for myself and my family. An incredibly fantastic idea.
And do you think that this might get so violent that, big sellers of gold and silver might say, yeah, we're going to wait a few weeks? They might play the market with their inventory?
What you've seen so far in a $50 move, it's a warm-up. This is gold, because everything's computerized nowadays. When this goes, it's going to be fast. It's all black box. They've got circuit breakers built in. It's all programmed. When it happens, it's going to happen, and you will not be able to react. So you either in or you're out.
You're saying that if it's that fast, we could get new all-time highs by the end of March.
We can get new all-time highs without giving the time point out, which, I'm trying to be a little conservative here, but without giving the time point out, it's soon. And if you don't have your situation set by the end of February, I think you'll be disappointed.
Bo Polny, gold2020forecast.com. We will have you back if you'll come back. Bo, thanks for coming on and giving us your predictions and your analysis on cycles. Not good news, at least for people in the stock and bond and dollar market. Not good news, but maybe it could be to be forewarned is to be forearmed. Bo Polny, thank you so much for. Oh, and you folks out there that are watching this on YouTube, go to the USA Watchdog page, which I have links at the bottom to go to Bo's site, gold2020forecast.com. Bo, thanks for joining us on usawatchdog.com.